morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we are going to work with the RSI and the AC, that is acceleration deceleration oscillator. So using this combination of tools, we will be developing an algorithm to trade on the hourly setup. And I hope you are familiar with the RSI's functionality. It is a technical indicator which we use to determine, or you can say even measure, the strength or the weakness of an underlying instrument depending on the recent price action. Acceleration deceleration, we have worked with this indicator earlier as well, and this tool is simply used to determine the acceleration and the deceleration of the underlying trend for any given instrument, and it helps us with the direction and the change of the direction, of course, and it will kind of guide us in determining the entry and the exit point. ATR, as you all are aware if you have been watching the earlier sessions as well, we use it to optimize our entry and the exit points. Before we get started, here is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which you will be developing during the session. Suppose if you want to use any of it, I would recommend that you do enough of testing and also keep it running on the demo accounts to get a clear idea of the efficiency. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we get started on our work. So here this is the hourly chart of the USD JPY, and I will explain to you how we are planning to use the combination of these tools, the RSI, the acceleration, deceleration, ATR, and also we are not much focused, but still even the price action will come handy as we will be taking the clue from the last hour's candle closing, and then we will be adjusting it to some extent using the ATR. So here the underlying idea is that we are looking at the RSI values, and when the RSI values are rising and when the RSI values are above 50, we are looking for a buy trade. So our first requirement would be that the RSI of the last hour's candle close should be greater than 6 hours back. So for that matter, we will be taking the two values. One is using the shift 1, another using the shift 6 on the hourly chart, and then we will be comparing those values, and if the RSI is rising and the last hour's candle closing is above 50, then only we will be going in for a buy trade. And on top of that, we will also be looking at the change of trend. So here there is not much of a change of trend. We had these positive values, then they were declining, and it almost went on to almost zero, not exactly zero, it is still 0.0009, and then again it is picking up momentum. So we are not looking at those trend. We are looking at a clear cut trend reversal when the earlier values were in negative territory and now they are bouncing back in positive territory, but the RSI should have been above 50 and it should have been in a rising momentum. So let us check, suppose if we are looking at this instance, then the trend change happens at around 22 GMT, and now if we go here 22 GMT, then this is the moment when the candle closes around 107.6, and coming to the ATR on 22 GMT, the ATR is below 50, so no trade will happen at such instance as we have the RSI value which is below 50. Suppose if we are looking at the prior RSI value, this is shift 1, shift 2, shift 3, shift 4, shift 5, shift 6, then of course the RSI values are rising, but the conditions are not really fulfilled that the last candle closing's RSI value should be above 50. So because of that, no trading will happen. And vice versa for the sell trade, we will be needing the conditions that the RSI value should be falling and it should be below 50, and then the acceleration deceleration indicator should drop from being in bullish momentum to being in bearish momentum. And for that we will have this check on the AC2 on the hourly chart, and whenever the positive values come grinding to zero and then the negative value starts to show up, we go and check if the RSI conditions are fulfilled. Here as you can see that RSI conditions are not really going to be fulfilled, as we have around 23 GMT the value is still above 50, so we will not really be looking at a sell trade here. We want the momentum to be in the bearish side only, then we will be looking at a sell trade. And then comes the question of where should we place the exact entry point, that is for the buy or the sell side. And at that point in time the ATR comes into picture. So suppose let us assume that here the buy conditions are being fulfilled, then we look at the ATR value of last 14 hours. Of course last candle close, and it is for the 14, the time period is 14, so 14 hours ATR will be taken as an average. And then we can use that Fibonacci series, and I think we can maybe if we place the order around 60%, it is 61.8, but we can maybe place our order around 60% of the hourly ATR just below the closing value, so we can deduct the last hour's candle closing by the 60% of the hourly ATR, and then we can place order for hour or two. Of course it is up to you, you can change the combination, you can make it 100% of the ATR, you can make it 200% of the ATR, or you can simply go in for a fresh trade at the closing levels, or you even can add it. So it's not that big issue. For us, for this session, I will be simply sticking with 60% of the ATR, and I will be adopting a strategy to deduct the 60% of the ATR from the last hour's candle closing, and then we will be keeping the 100% of the ATR as our stop loss and 200% of the ATR as our target price. So that will be the uh, combination with which we will be working in today's session. So let us get back to the work. For that we will need the setup of the RSI, the acceleration and deceleration oscillators, and of course the ATR as well. So let's get started. First of all, let us bring if blocks, and we will do the instrument subscription here. We can work with the Euro USD, we can work with the USD JPY, or for any other currency instrument. For the time being, the indices are not really supported. You have to use some tweaking and a bit of tactical methods so that you can work with the indices as well. I will show you how to do it someday, but for the day let us stick with the USD JPY. In today's session we will work with the USD JPY. So here we go. Let us do the instrument subscription first, and let us color code these flows so that in case we miss out on the flow we will immediately notice it. And here comes the default variable and the default instrument. As a standard practice, the default instrument is taken as a Euro USD in the VULGF Forex platform, and we have to go and change it if we wish to. As I said, we are working with the USD JPY in today's session. We will need to change it. Okay. We got the USB GPY. We save it and we go straight to the candle instrument. On candle and comes the bead candle. Ask bead any of you can utilize, not much of an issue. And here is the candle instrument. Okay. So we take this last bit candle instrument, and we add it here too, and we see if the default instrument is equal the same as the candle instrument, and then again we check on this candle instrument to make sure that it is USB JPY and not any other instrument. So for that we have to be watchful. Now we look at the position amount. Again we need to take a if block, an if block, and here again we see that it is meeting the criteria, and we go for position amount. We will look at all position amount, and comes the position amount. Position amount should be at 0. So here we go. Then we start getting the required blocks, the acceleration, deceleration. We will need two of it, as I tried to explain to you on the chart. We will be looking at the last hour's AC2 value. For that we will be utilizing the shift 1, and then comes the prior candles AC2 value. For that we will be utilizing the shift 2, and then we will be looking at those indicators value at that point in time, and if suppose our criteria is met, the order will be placed. So that's how it is going to work. And as I see it, we need to change this to 1 hour. So here comes the hourly. Position amount should be 0. The instrument is USD JPY, shift is going to be 1. And we got this positive negative values, which we will be determining, or you can say we will be using to determine the underlying momentum. Now we go back to the indicator field, and here we have to use the AC2 AC acceleration deceleration oscillator. So here we here we try to join the dots. Okay, we got it right. And now we also convert this into hourly setup. Here the shift will need to be kept at 2, that is it will be looking at the value 2 hours back. We don't interfere with the technical function default values. So here we got these outputs, positive, negative, which we will be utilizing later on. Now comes the question of looking at the RSI values. For that also we are going to need two RSI blocks, one for the shift 1, another for the shift 6. So AC2 with acceleration deceleration oscillator is looking all fine. So we now bring in the RSI, and for that we will need to search for the RSI. Oops, where it has gone. Here, no, this is not part of the Williams or the MA or the momentum. I think we should find the RSI somewhere here. Or misfortune, it is not even there, maybe others. Oh no, yesterday only we were working with RSI and now we are finding it difficult to get. Mm-hmm. It is not showing up here too. And it is kind of testing the patience. Indicator. Yes. Let us see and the other. RBI, SAR, SART, zigzag, pattern. No. Volumes, components. All blocks, let us see. Let us try searching for it. It is taking time to load. And if it hangs, then we will be in trouble. Okay, so we got this. Let us search. Oof, ooh. P and then comes the R. So it should be somewhere here. Okay, so here we are looking at the possibility of finding the RSI. This RSI has been developed by a third party. It is not coming here also, so because of that it is getting frustrating. Okay, let us close this and components. No indicator. It should be somewhere in momentum. Let us again do the search. It is wasting our time. Okay, we got the RSI finally. Oof. Now we are going to need and here we defined it at hourly, shift 1 and shift 6. Hourly time frame has been defined. Now we make it to shift 1. The look back period has been defined at 1. So it will be going back in time by 1 hour. And this block will be going back in time by 6 hours. And then we will compare the values at the last hour and the 6 hours back. And if it is rising and above 50, it will meet the precondition for the buy trade. If it is falling and below 50, it will meet the precondition for the sell trade. And now we bring in the ATR. And let's hope we will not be wasting that much time this time around. Okay, we got the ATR straight away. So sorry. Now we are utilizing the ATR at 1 hour. So we make this hourly. And we keep the shift 1. We take into account the value prevalent during the last hour after it has closed to guard against the volatility actually. So indicators are almost done. Now we have defined all the indicators, that is the combination of these 3 indicators have been well defined. Now we need to do a bit of an calculation for our entry and exit points, and for that we need to bring in the calculation expression. So we turn our attention to the components, and in that we are in need of these calculation expression blocks. So we got And now we take the ATR value and we multiply it by 60 percentage, that is by, for to get the 60% we will be simply multiplying it by 0.6, and we bring in this ATR value. We create a fresh variable here and its name uh, entry pips we can say. So we do this minimum requirement. Okay, so we got it. Now we do the multiplication. We multiply the ATR by 0.6 and we will be getting the result, which will be adding or subtracting depending on the order side for optimizing our entry or the exit points A1 into A2. And here comes the result of the calculation, and we can name it as EPP, entry point pips. Okay, so the result of the calculation is with us, and now we need to define the entry and the exit point. So as I had explained to you on the chart, the basic idea is very simple. We are simply looking at the trend change when the momentum turns from bearish to bullish, provided the RSI condition is fulfilled. We will be placing a buy order, and if the conditions turns bearish when the RSI is also falling and below 50, we will be looking at placing a sell order, of course, and for that we need to do bit of optimization as well, and that's what we are doing. So here we will now take in the historical candle to determine the last candle's hourly closing, and we again go back to getting the info, and here we get the gate historical candle, and here the closing value of the historical candle is of importance for doing the calculation, but the direction, that is if the last hour's candle close was in with gains or with losses, it doesn't really matter, and we have to connect this on the upper side so that it is in the flow prior to the calculation, for which we will be utilizing the historical candle. So here we got this done, and now we join the dots. And as I said, for the buy entry point, we will be looking at the candle 25 closing value. First, we need to change its default period to 1 hour, and then we'll come okay and shift 1. hourly and shift when it looks good. Yes. Now candle 25 is closing level. Since we are calculating the buy side, we need to take into account the candle 25 closing level, and for that we will be looking at the auto created variables here, and the candle 25 is of use while determining the buy and the sell side. So here we take candle 25 closing level, and then we deduct the 60% of the ATR of last 14 hours from the last hour's candle closing, and that will get us a good amount of buffer. So we now cut back. So here we got this, and for buy we will need to do calculation on the minus side, A1 minus A2, and the result of the calculation would be BE, buy entry point. So here so far we have developed this, and as I look at the watch I see time is running out. So for the day that's it, and again I will be back tomorrow. Not really, on Monday. Tomorrow is weekend, so 2 days you can have fun, and then we will be again at work starting from Monday. So see you on Monday, guys. Goodbye.